Hi everyone, so nice to see you all here today. Yeah, I guess this is a really exciting topic for the three of us to discuss, and I think maybe the good way to start is to give you a little bit of context of why this topic even came about. My name's, firstly, for those that don't know me, my name's Ariana. I'm the founder of an app called Spoke. We are currently the UK's leading music-led mental wellness app. So we do music-led kind of mental wellness sessions, and we target an audience very different to like Calm and Headspace. So I've been very interested in the mental health and mental wellness space for a very, very long time. And one thing I can say is people go into our app and they check in with their intention, and money is usually the number one or two thing they check in with. And that's just been a rule for the past 2 years. Money, relationships are the two things that are most on young people's minds. One thing that I noticed, well, I've noticed for a while now, is the amount of money myths that are circulating around social media. I hear a lot of things like, and by the way, and just for context, I'm not an expert. I'm not a psychologist myself, and I'm not a financial expert. I'm an entrepreneur. I'm someone that runs this app. I've noticed these trends. And so I've been curious for a while as why things like, oh, just you've got to go and manifest money and it will come to you, and just be really grateful for money and then it will come to you. Or, the only way to make money is by being an entrepreneur and running your own business. And all of these things, crop up on social media quite a lot. And when I saw Becky was doing this conference on digital mental health and money, I thought, oh, there could be something really interesting here to discuss these myths and basically look at them through the lens of psychology and through the lens of a financial expert, someone who really understands that landscape, and basically see where we come to, because some of them I think we can dispel, and some of them, there probably is some really robust kind of ideas and thoughts and knowledge in there. So that's sort of what this session is about. And I don't know if you read the page already, but some of the mindset myths we're going to be looking at are things like, more money means more happiness, for example. And you shouldn't talk about money. We have a culture where we don't talk about money much. And things like you have to be rich to be able to invest, like that's been around for a very long time. And also, things like my problems will be solved with more money. So that's sort of the questions that we'll be looking at. And I'm really excited to introduce you to two incredible experts in their own space. So firstly, we've got Paris. So Paris she's a trainee clinical psychologist. She's a psychotherapist. She's a life coach. She's an award-winning mentor. She's worked with many people, and she's essentially dedicated her life to enhancing mental wellness and mental health for people. She's got expertise in human behavior, emotions, dynamics, relational dynamics, and she basically looks at really helping people improve their self-awareness, develop healthy coping mechanisms, and create fulfilling lives. And actually we worked together, and she was our in-house CBT therapist at Spoke for a little while before she went on to do her PhD, which she's doing at the moment. So she's just doing absolutely incredible work. And she's in the NHS at the moment. She also runs a private practice. She does personalized therapy and coaching programs. And she's worked with everyone from the BBC to Radio London, to Barclays, to us at Spoke, PwC, and lots more. So that's Paris, who you'll meet in a second. She'll give a little bit of an intro to kind of her angle in a second. And then we've also got Vicky, who will also introduce herself properly, but give a bit more of an intro to where she's coming from in her angle. And she is a portfolio specialist at a private equity fund here in the UK, and she's focused on delivering private market solutions for the private wealth channel. So this is a traditionally untapped client base for private market investments. And her her previous expertise includes working for multifamily offices, helping managers portfolios of ultra high net worth entrepreneurs, and she's worked as an investment analyst at Citi Private Bank in New York as well. So she graduated with a first class in economics from Newcastle University. She's completed her Chartered Institute for Securities and Investment Certificate in Private Client Investment Advice and Management, and is a Chartered Financial Analyst, that's CFA chart holder. And she's got a very keen interest in financial literacy and inclusion in this space. So her work and her knowledge on this, every time we speak about this, I'm completely blown away and I learn a new thing. So I'm absolutely sure you will too. Before we kick on with the myths, I thought it'd be really great for both Paris and then Vicky to just give a little bit of context to the lens that you're seeing this through. Do you want to start, Paris?
Yeah, absolutely. Thank you so much for introducing me. And again, thank you so much for having me here, Becky. So, I mean, one of the myths that just pops to my mind that we're not going to discuss in too much detail today, but, is the idea that money makes the world go round. And the reason why I brought that up is because as a therapist, conversations about money are always in the therapy room, whether that's about fees, whether that's about, having enough money to engage in a particular activity, or just feeling like you're not having enough to sustain yourself. I think money is a topic that every single person can kind of relate to in one way or another. And particularly, living in today's society where there is a cost of living crisis, the conversations about money are more importantly discussed than ever. The lens that I'm coming from is one of intersectionality. So identifying that money is something that's part of all of our lives, but looks very different and plays different roles depending on your socioeconomic status, your cultural background, and just your general understanding of education or financial literacy. So I hope my contributions will kind of adapt to the differences within people and the intersections, as well as the importance of money and mental health.
Amazing. Thank you so much, Paris. And Vicky, do you want to give a little bit of context to the lens that you're seeing this through?
Of course, and sorry for making you say so many so many words in your introduction. um, so yeah, lovely to meet you all, and thank you for joining. And Ari, thank you for inviting me here today. I think this is a really exciting conversation because we're currently in a market where we've got rising interest rates, and many younger people and generations have not experienced this or lived through this before. So it's a very interesting time. We've all heard the phrase cash is king. And I think we're beginning to see that come true for some businesses who are struggling to access liquidity with these higher borrowing rates. So it's an extremely interesting time. I also think there's a difference in how younger generations are accessing advice and education on the topic. We've seen a emergence of social media platforms, fintech, you know Instagram, TikTok, delivering that advice, and really traditional channels such as banks are not building that relationship with the younger generations. And I think there are positives and negatives to this. Firstly, it opens up the conversation to a huge audience and potentially makes it more accessible. But it's also really important to remember that the advice, when it's on a mass market platform, is not tailored to the individual, or they don't have sufficient context of personal circumstances. And I think that's a really important thing to note, because there are some key concepts when creating and building a portfolio, being suitability and risk. And a portfolio might sound like a very fancy word, but every single one of us has a portfolio. They might vary in size. It might be 100% cash. But even if it is 100% cash, that is still a portfolio. And even if you're not doing anything with your money, that is an active choice as well. So I think we're at a very interesting intersection of worlds between tech, finance, and access to education. So looking forward to discuss that in more detail with you guys here today.
That's brilliant. Thank you so much, Vicky. Okay, let's jump straight into the first myths. And just for context, we'll leave 10 minutes or so at the end to ask questions. But at the same time, this is an open discussion. So if you suddenly want to jump in, you got any thoughts, got any questions, you heard some research that relates to what we're talking about and it might add to the conversation, please feel free to do so. So the first myth we're going to look at is the concept that more money means more happiness. What do you think? Maybe Paris.
Oh, more money means more happiness. I think the first thing that kind of comes to my mind is thinking about sort of social media and the fact that we're explicitly seeing people's wealth and the things that money can buy. And people tend to seem happy, right? On the outside, you know, when someone's on a private yacht or a private plane, they're not sad, they're smiling, they're happy, they seem happy. And I'm just kind of thinking back to sort of from a young age, I think, you know, thinking about my kind of background, the idea was that, you know, the more money that you make, the more likely you'll be comfortable and live a more happier life. However, I guess thinking about this from, I guess, a historical sort of stance, actually, there's an idea that more money leads to unhappiness. And the fact that a lot of the time when we think about kind of gaining money, it's about sort of the material, but it isn't necessarily looking at the inside. So sort of philosophers and sort of religious teachers and things like that would often say that actually it isn't necessarily the finances that makes you happy, but more the kind of internal things, your values and how you spend time in the world, you know, your relationships that you're creating, personal growth and sort of inner peace. And money can't really buy those things. Another thing to kind of think about is, you know, comparison. Social comparison is just generally a thing that all human beings have. We're always kind of looking towards others, people who might have more than us, and where do we measure up? But then when you kind of throw in, you know, the 21st century and social media, and it's not just kind of keeping up with the Joneses and comparing ourselves to our next door neighbors or our inner circles and families. We're now comparing ourselves to people in completely different worlds and countries. And essentially, the more we see from other people, the more we want. And that often kind of reduces the gratitude within us, which ultimately gives us that sense of peace. And we're constantly kind of striving for more in the hopes that it will make us happy. But there's often a cap to that. So there's a lot of sort of research out there that suggests that there's a certain amount that we kind of gain, but then after a while we get used to that. So we can almost get used to the kind of feeling of happiness that we get from money. And then what happens next? So those are kind of some of the things that I wanted to kind of contribute with regards to that one. The last point is this idea. I think I kind of mentioned it just before, but I wanted to give a bit of a psychological term. So it's hedonic adaptation. And it's the idea that human beings adapt to their environments. We adapt to the changes in our lives. So, for example, if you get a promotion and that all of a sudden means a bit more money, at first you'll really feel the benefits of that. It might mean an extra holiday a year. It might be more dinners or, you know, whatever else you decide to do with your money. But then you get used to that. And then you want more. So that kind of short burst of happiness that you might feel in the short term doesn't always kind of last long term. So yeah, I'm not sure if more money means more happiness.
That's really interesting, and I think most people can relate to that idea of, you know, the more you have, the more you want, or your kind of baseline sort of levels up a little bit. What are your thoughts on that, Vicky? Because obviously working, you know, in the financial world, you're kind of seeing these levers happening in real time. Do you have any kind of instinctual thoughts on that?
Absolutely. And I think, you know, I'll maybe start with what is money? What is the definition of money? Because it can seem quite intangible, you know, it's something that everybody maybe wants more of, but what is the definition? It's also sometimes seen as a dirty word, you know, to say actively that you want more money. But really it's just a universal medium of exchange. And if you didn't have money, you know, you would still be engaging in transacting with people. You would still be, you know, if you think back in the day, I'll give you 2 cows, maybe you'll cook me dinner once a week, for example. And what money actually does is enable more people to participate in trade, and make it more efficient for individuals to be part of that world as well. So it's actually, you know, in my view, very much not a dirty word. It's something that enables people to access investments and markets, and, you know, to pay for things without having to, say, you know, give somebody something that you own via a product or service. And so, you know, it theoretically, I think when you link it to the idea of happiness, that's an emotion. I don't think, you know, money can't buy you happiness, but what it can buy you is opportunities and freedom, and options, because it increases the scope with what you can do and the decisions that you can make. It increases the number of options. And just to link back to Paris's idea about, you know, if you've got some, you want more, but also you're not always satisfied. There's that theory that if you're given, you know, 4 chocolates and you choose one, you're more satisfied with your choice than if you had 21 chocolates and you choose one. And I think the same can be applied to the more money that you have, the more options you have, you're not always more satisfied with the choices that you make with that. So that would be my contribution there. But I do think, you know, we can't be naive that you know, when you say, oh, I don't want more money, or money's a dirty word, that's actually a very privileged position to take, because if you don't have money, that's the one thing that you absolutely need. So you know, there is a privilege that comes with saying, I don't need any more money.
Yeah, that makes complete sense. And I mean, the ideas around freedom and choice, and those are really important things. If money, like you say, is this mechanism that allows people to have these things, then that leads really nicely onto our next, I guess, whether it's a myth or a cultural norm, but the idea that we shouldn't talk about money. If it's really just this mechanism that allows us to trade and gives us more choices, why as a culture do we not talk about it? Why is it such a taboo? I'm absolutely excited to hear what both of you think about that. Feel free to jump in, or Paris, feel free to go first again.
I'm happy to kick off with this one, because people don't talk about money, even in the finance world. People don't talk about it, or they don't talk about personal circumstances, and it is a sensitive topic. It is extremely personal, and you know, there are lots of reasons. Different cultures, different genders have very different attitudes to it. It's only really in this century that women have been able to own their own money or assets, and it's something that they're only just starting to have conversations about. But I strongly believe that you should absolutely be talking about money with your friends, with your peers, with people who don't come from the same background as you, with as many diverse people as possible, because financial health is just as important as physical health. And just how you do a health check and MOT, you should be doing that with any, you know, regulated financial advisor. And I think that's what's key. It should be somebody who's trained in the sector, who can help you to quantify and prioritize your financial goals. There's one key concept that I do want to touch on when it comes to thinking about, you know, individual circumstances and how you can participate in investing, but also in talking about money with each other, and that is risk. This is the key factor when you're thinking about where to invest your money. And there are 2 elements that determine somebody's risk tolerance. That's your ability to take risk. That's quantitative measure based on your wealth, based on your income, your time horizon, liquidity requirements, and also your willingness to take risk, which is related to your individual perception of risk. And I'm interested to see how Paris thinks about that from a psychological perspective. But, you know, it's how do you feel if markets go up or down by 10%? How comfortable are you with volatility? And those 2 metrics, your ability and your willingness, really determine how you're going to feel about your investments and how willing you are to participate in riskier sides of the market, versus more traditional, you know, safer returns such as bonds, for example. And they can help you determine an optimal portfolio for yourself, really. There's a huge gap in education when it comes to financial markets, and that's also just emphasized by people not talking about it. And by doing that, we are omitting so many different demographics who, you know, potentially you don't have that access to the investment world, and you're just furthering that wealth gap. So my view is that we should absolutely be talking about it. You shouldn't be ashamed. Everybody comes from a different personal background, circumstance, with different access to levels of education on the topic, and we should be trying to narrow that wealth gap for the future generations.
And just maybe a quick point on that. I mean, do you think that there's something in the fact that there are many people who don't want to be open because it would just highlight the differences too much? So there's almost there's a intentional opaqueness.
I think rather than an intentional opaqueness, I actually think that it's an incredibly intimidating world at times. Just from the language that is used, it becomes very inaccessible. It's very easy for individuals to feel like they don't have the knowledge to participate, and that tends to, rather than the opaqueness, it just tends to make people not want to talk about it because they don't want to showcase their potential lack of knowledge on the topic, and that's absolutely nothing to be ashamed of. So I wouldn't say, you know, it's a intentional opaqueness from individuals, but I think that it's also a very regulated industry. So the more money you have, the more is open to you in terms of investment opportunities. There are different layers of the world that you can and cannot market to. I work in a sector which can only be marketed to professional investors, not retail investors. So it's when you sort of unpick those layers, you start to realize actually there's just a whole world which people don't understand, and it's not in the curriculum in schools, or it wasn't when I was at school. So I you know, I think there are people willing to talk about it. I think it just is an incredibly intimidating sector at times, and it's such a big sector as well. So you can just, there's so many different avenues that you could explore.
That's absolutely fascinating and so interesting. Paris, what are your thoughts?
I mean, Vicky pretty much hit the nail on the head with most of what I was going to say. Just, I guess one of the main things that comes up to me is the kind of shame aspect if you are someone who has means to money or wealth, and not wanting to come across as sort of boastful. But again, what can often happen is you might have knowledge that someone might need in order to kind of get them to a place of feeling comfortable. And if you're not sharing that, you know, you're not contributing to the other person, your friends, or whoever it is around you. So I think the sharing of knowledge is really important. I also think it's important to kind of tap in with your intention. You know, what is your intention behind speaking about money? And if you know your intentions is to kind of share for positive reasons, to kind of educate, then I would say definitely go ahead and do it. I think it's a cultural thing. I think culturally, particularly in the West, like you just don't speak about money. You don't speak about how much you're earning. And if someone asks you, it's almost as if like you freeze up, because it's just not something that, you know, you're used to being asked. And in some ways it can be seen as rude. But I do think it's important and time to start to kind of pick away at that and not seeing it as a taboo anymore. Because unfortunately, like Vicky said, it is just, you know, opening the gap further. And also it's also kind of excluding certain people from conversations. So I think there are certain rooms in which money is talked about and talked about quite openly and freely, but not every single individual has access to those rooms. And actually that is creating sort of distances and widening the wealth gap. Another thing I guess that comes up for me is sort of this, again, fear of comparison. So if you start sort of opening up and talking about your finances, and actually you might be in a really good place, you might be in a better place, you know, this year than you were the last. But then if you open up that conversation and hear that someone else is making a bit more than you, then that might sort of lead to feelings of inadequacy. And then again, it's leading that kind of, rather than you feeling quite grateful about where you're at and seeing the difference in your journey, then comparing, well, I'm here, but I'm still not quite there. And that kind of ties me into the links between opening up about money and looking at depression and anxiety. So depression and anxiety, I guess, the most common mental health difficulties that people can experience. And it was something that Vicky said that kind of, I think it was about risk, that sort of sparked my understanding or idea about the links between having sort of an anxiety disorder or having difficulties with anxiety and opening up and speaking about money or taking risks. So there's an equation for anxiety, and it's the idea that we overestimate the possibility of risk or danger or harm to ourselves in some way, and we underestimate our abilities to cope with that. So if you think about that, that's almost like that would completely stop someone from taking risk, if that makes sense. So when we're experiencing anxiety, we're much more likely to take risks, because what we're seeing is all the dangers that's going to come out. This risk is not going to pay off. There's going to be no reward from this. And actually, if it doesn't pay off, because potentially risks aren't going to pay off, I'm not going to be able to cope. I'm not going to be able to bounce back. And that often leads people sort of sticking to their comfort zone, and sometimes actually not even seeking out, education or conversations that might mean a more calculated risk. I hope that kind of makes sense. The second thing is sort of around depression. So often when people are feeling depressed, it's because there's been some type of loss. It could be a loss of status. So for example, someone might have lost, a business opportunity, or it could be a loss of an individual, you're going through bereavement, or it could be a loss of any sort of loss, essentially. It could be loss of health. And that can lead to us feeling depressed. And if you've experienced such a big loss that's sort of taking you aback in life, it kind of makes sense as to why you're not going to want to put yourself out there financially to make risks or to have conversations, because in that moment when we're sort of feeling low, we're kind of just plagued by negativity and negative thoughts. So it might be that we could possibly have the means to make a calculated risk, but those negative thoughts are going to be like, don't do it. It's not worth it. If you put yourself out there, it's going to end, it's going to end badly. So I think it's really important to kind of hold in mind that, yes, sort of the general public is definitely lacking in financial literacy and not having those conversations enough. But when we kind of add in the complexities of experiencing mental health difficulties, it makes those conversations even more difficult and can often lead to these vicious cycles where if we are struggling and we're depressed, we don't want to talk about our finances, which leads to more problems, which leads to the even more importance of having those discussions, but then having more shame, and you kind of spiral into this kind of vicious negative cycle. So yeah, I would say it's very important to talk about money, not just with our friends and families, but with professionals as well. If you're in therapy with your therapists, or if you do have financial advisors, or just want to pop into the bank, like trying to start up those connections and relationships, because they will definitely benefit you in the long term. I don't know how many of us are having those conversations. I certainly know I'm not enough, but this conversation is definitely triggering and sparking the need for that.
I mean, there are so many amazingly important points that you've just brought up, and what you left on, the idea that we should all be having some kind of financial advice and guidance, that typically is seen as something that only the most wealthy people would do. So really, I don't know anybody who gets financial advice if they're not, they've not just sold a startup, or they're not like mega wealthy. And that, I guess that's entrenched in our culture, and there's so many interesting points there. But I think it leads really nicely into the next, I guess, myth, that you have to be rich to invest. And I guess, yeah, I'd love to hack that a bit and get your thoughts on, what do you think about investment? Do you actually need to have, and taking your points, Paris, into like the mental health, and maybe you've gone through something, so your ability to cope with risk is a lot lower. So, and investing, it can be high stakes kind of game. You might lose stuff, and you kind of need to only invest what you can afford to lose in some cases. So I think this will be a really interesting myth to get both of your opinions on.
I'm happy to start off with this one because I know Vicky's going to have a lot more. I actually don't know much about investing, so I'm really keen to learn. I had 3 points that I wanted to kind of tap on to with regards to this myth. So the first one is misinformation. Like you said, the general kind of person doesn't have the adequate knowledge around investing. I know I certainly don't. And I just think if you kind of are hearing that there's all these losses that potentially are made, or hearing people or experiencing people who have, experienced losses, you're just going to see it as a negative thing, or perhaps, you can't afford to invest. Only the wealthy have the right to invest. And again, that lack of knowledge kind of just leads to not, taking those chances, or potentially taking opportunities to be more healthier with your money. So that's the first point. The second point, sort of from a psychological lens, is this idea of learned helplessness. So it's the idea that, individuals might feel that investments is beyond one's capabilities. I don't have the financial education, therefore I physically can't invest. And even if opportunities are presented your way, you almost kind of shut off in a form of sort of self-preservation. Like, this isn't for me, I'm therefore not going to go ahead and even listen, let alone to take the steps forward. And a lot of that can kind of come from our beliefs. You know, a lot of our beliefs about money come from far beyond education. They come from the household, how we grew up. If we had parents who were really into saving and not investing money, then we might think, actually, no, the way forward is to just save and stack. When actually what we hear is that, yes, saving is really good, but actually investing can help us to kind of have more to save. So acknowledging if there's those kind of limiting beliefs in you that stop you from taking those steps forward, but also have you entered a point of learned helplessness where you feel like this just isn't my remit, therefore I'm not going to take any steps forward, is another kind of thing to hold in mind. And then the final point from me is the idea of kind of overcoming what's our normal. So there's this kind of idea of inertia. I hope I've said it right. And inertia essentially is when people kind of maintain their normal, stay in their status quo. This is my norm. This is what I'm up to. You know, I've relied on, you know, my 9 to 5 payment, and that's it. That's okay. And actually, in order for us to kind of wiggle out of certain beliefs and to actually start to consider the potential of investment for ourselves, we need to overcome inertia. We need to kind of overcome the internal avoidance that stops us from pushing forward, which could potentially give us more benefits in the long run. But a lot of that's a psychological barrier. You know, we may have the finances, but internally we feel like it's not for us, or we don't know how to do it. And that internal barrier kind of stops us from taking those steps forward, or potentially even stops us from seeking out the information that we might need. So those are some of the thoughts that kind of I come to bring to the table. A lot more about looking at what stops us from investing from the internal, as opposed to kind of what we have in the external.
I think you absolutely nailed that, Paris. I mean, you are touching on such an important topic, which is only beginning to be researched, but behavioral finance, and how people are, you know, some of those behavioral attributes you're talking about, how it's impacting the way people approach finance and investing as well. And it's common to all of us. We all have you know, our own biases, cognitive or emotional, and they come out in the investing world as well. So it's something that, you know, you're actually, when you are investing, you are trained try to not have those. It's why you have diverse investment committees, because you want as a bigger pool as of group as possible to try and counteract your own biases. So I think you're picking up such a good point. To relate it back to the question, which is, you know, or the myth, you have to be rich to invest. This is such a common misconception. And I said it at the beginning, every single person has a portfolio, varying in size, maybe 100% cash, but you do have your own portfolio. I think, you know, you have to, to be intellectually honest here. Of course, if you are rich, you can afford to take more risk, and you also have more options open to you. So you have a wider spectrum of investments which you can pick from. So there is that aspect to it. So there's an element of truth. But I think the real problem and the barrier to access is on information and the dissemination of information on how to invest. Lots of people want to, but they just don't know how, and it is very daunting for many of us. And I think, you know, this is where for me anyway, what I've seen is the emergence of social media in younger generations, you know, targeting it as a platform for advice on their financial portfolios rather than regulated industries like regulated banks, for example. And I think there's one element that's quite concerning here, because I think we've probably all heard of the phrase cryptocurrency and the buzz of cryptocurrency that's come about. An extremely new, unproven asset class. I think academics are still debating whether that falls into a commodity or a currency and how it should fit within portfolios. But the real takeaway here is, when you're investing in something that is so new and so risky, because it's a completely new asset class, you should only be investing what you can afford to lose. And that's a really important point when it comes to alternative investments, such as this, such as art, for example. They might be passion investments, which is fine, but to be responsible in your portfolio, it's only what you can absolutely afford to lose in those. And I think what was worrying is an incredible amount of young people invested more than what they could afford to lose, and actually invested without having a core diversified portfolio on the side, without having an ISA or equities or bonds. They were just exposed to crypto. That is not a diversified portfolio, and diversification is a really key financial term, which is you need to spread your risk across a multiple asset classes, multiple investments. I'll link it back because I know Becky said that this a TikTok investing article had come up in an earlier session about someone learning from TikTok to become a stock picker. Incredible success story. She seems to have a six-figure portfolio investing. But stock picking in itself is extremely risky. You're picking individual companies. They're public companies, but they're still single stock companies, and that's not a diversified portfolio. So you will always be exposed, to Paris's point on social media, to the 1% success story, but that is not the majority. And I think this is why it's also important, whether you're rich or not, to seek out that regulated advice. Banks are here to help. I know historically they have a bad reputation with the global financial crisis, and that has not helped access to information because people feel intimidated when they step on the door, and maybe they also have trust problems with banks as well. But that it is similar to a healthcare profession in terms of the education and the steps that you have to go through to get qualified, and the ethical tests as well. So that is why I am so passionate about people going to the right sort of platforms for advice, especially when you're not rich.
I mean, you just couldn't have said it better. I think that's such important advice and things to take forward. And especially, when, like what Paris's points a little bit earlier in the conversation, we really only see that 0.01% success story. And then all of our social medias are filled with that success story. And then that success story becomes normalized. So we're like, oh, well, it must be, it must be sound, but it's just because that one person has nailed it. And I think that leads really nicely again into the next myth. And it's linked to a stat that I read quite a while ago, actually, maybe about 6-7 months ago. I read that 83% apparently of 16 to 24-year-olds want to run their own business and want to basically make money that way and work for themselves. And I think that there's a really big, I guess, whether it's myth or misconception or idea that being an entrepreneur and running your own business is the key to making money. And that's almost like the only way to make money. There's a lot of glorification and hype around that being the desired career path as a young person. So I'd love to pick at that a little bit and just see what your thoughts are, if you've heard any kind of trends around that, what your actual thoughts and experience are, with the people that you've worked with and in the market as well. Yeah, whoever wants to kick that off, please jump in.
I'm happy to. So for background, I used to work at a multi-family office, and we managed portfolios that were of significant size, so a minimum of 50 million, usually an average of 100 million. And I specifically worked with entrepreneurs. So entrepreneurs defined as being those who've generated wealth from building their own business. And yes, incredible success stories. I think it's important to note that the type of people that become entrepreneurs, which are significant risk takers. You know, it is a risky process setting up your own business and putting your whole income stream based on the success of your own business. And I'm not trying to discourage anyone who wants to build their own business or be an entrepreneur, but you see it in also the way they like to invest as well. So they often have significant leverage on their portfolios. They have extremely concentrated positions and a lot of exposure and shares and stock in their companies that they've developed. They can develop quite a home bias. So, you know, they only want to invest in the sector that they have experience in, etc. And that might be fine when you're younger and you're hungry and that's your strength. But as you move to a more, you know, wealth preservation attitude as you get older, your objectives change. And it's important to note that, you know, it links to what are your financial goals and what are your objectives. You know, if you have liquidity requirements, you know, annually, that you have to satisfy, that is really going to limit your ability to take risk as well. You know, if you have dependents, that limits your ability to take risk. So you know, I think it's entrepreneurs are a very interesting case, and I think there has been this glorification of a get rich quick attitude, but it goes back to you know that 1% and really, you know, ensuring that you're presenting the risks you know, responsibly when people are thinking about that. Often what you'll do for entrepreneurs in wealth management is a completion portfolio. So if they do have their own business and it's in healthcare and they're extremely exposed to that sector, you won't invest in healthcare in their you know, liquid portfolio that you're managing for them to diversify that risk. And you know, I think that's just an important point to note, really, which is, yeah, the actual question I think is all my problems will be solved with more money. So trying to relate it back to that. You know, it depends what problems they are. If it's an affordability problem, yes, okay, your more money probably will solve it. But you know, it definitely can't solve all of your problems, and it really depends what type of person you are, what risk you're willing to take, your own personal circumstances, and also what you enjoy doing. You know, how you're going to actually flourish in life. And I'll pass it on to Paris here, because I think you know, you can get caught up on this idea of more money and, you know, I need to be in a job or a sector that's going to maximize my potential to earn that. Actually, I think, you know, that's potentially not the purpose of life, and we can debate the purpose of life in many different ways, but I'll pass on to Paris as a psychologist, which is where you're actually going to get that satisfaction and feel like your problems are being satisfied.
Yeah, thanks, Vicky. Some really, really interesting points there for sure. I think the first thing that kind of comes to my mind is this idea that we're kind of thinking about sort of the idea of entrepreneurs and having your own business being, you know, the way to be happy and to kind of make money. And I think in an earlier discussion, Ari, I hope you kind of flesh it out a bit more, but you mentioned something about it isn't necessarily about having your own business and making all of this money that makes the person happy. It's about doing a business that you're passionate about and seeing that thrive. That makes entrepreneurs successful. And I'm thinking about the stuff that I see on sort of social media now. The idea is that having your own business is going to accumulate this amount of wealth, which is going to allow you to live a certain lifestyle. I actually ran a workshop a couple of months ago, and it was all around entrepreneurship and mental health. And some of the kind of points that kind of came out, which aren't seen and which often we don't see when people are like having these amazing businesses, making all this money, is just how much pressure is placed on the individual. You know, how much you have to kind of organize your own time, and you don't have, you know, 27 or 30 days annual leave. Like, you have to work and make the time to take those breaks. And often when you have your own businesses, and you've kind of rushed into it, you haven't thought it through, you haven't got the right support around you, there are high levels of stress. You know, there are financial pressures. If you've put all your savings into a business, you know, there's a lot of pressure to make it work. Isolation. If you're a startup, it might be that it's just you for the first couple of months or years. And doing a lot of that on your own and not having a support system or a team can often lead to look like long hours on your own, which can lead to kind of social isolation and depression in the long term. So there are a lot of factors that people don't see when they think about, I want to be an entrepreneur and I'm going to make all this money. that might often lead to sort of poor mental health. But I guess just kind of thinking away from that, the idea that a lot of the time when we think about having our own businesses and that sort of leading to more wealth and happiness, is this idea of escapism. You know, if you are someone that's currently working sort of a 9 to 5, which works very well for a lot of people, you know, you might be a bit fed up, and it might not necessarily be with the 9 to 5, but with the particular role. And then you might see a way out being, if I have my own business, I'm going to do something I really love and enjoy. Therefore, that's going to get me out of how I'm feeling. It goes back to your point earlier, Vicky, that actually money isn't going to change how we feel. It might change our circumstances and the opportunities that we have, but it isn't going to change how we feel. Oh, I'm going to sneeze. Okay, it's gone back in. So what we might find is that we're in a business that we are enjoying, but the feelings that we felt prior to that are still like, oh, bless me, the feelings are still there. So yeah, essentially having your own business or having more money isn't going to change how you feel. It might in the long term, or it might sort of in your mind, if you think about fantasy of having all of this money and having all these means, but what actually matters to you? And I think that's really what's most important. When people talk about money being a value, I think great, nothing to be ashamed about, but money is the means to the end. What is money going to afford you? And that's actually what really matters. So someone might say, I really value money. But the end value is because that will allow you to set up your family and make sure that your family is good for a couple of generations to come. For someone else, it might be status. Status is really important to them. So having money might provide them with that status. For someone else, it's freedom. I want to have this money because I want to tour the world. So rather than kind of looking at, I want to have money, which is the means, looking at the end goal. What is this going to afford you? And how is this going to lead into the life that you want to live? And no one can really tell you what your kind of core values are or what it looks like to have a meaningful life. And again, you know, being an entrepreneur might provide you with that, because you might be someone that really values autonomy and making decisions for yourself, and that might work amazingly for you. But it might be that actually you don't mind working underneath others, and you're someone that likes teamwork and contributing, and actually working for another business might provide you with that value. So again, kind of gone on a bit of a tangent, lots kind of came to mind, but essentially I think it really is just looking at the idea that yes, for some people, being an entrepreneur is going to provide them with the life that is worth living and gives them that sense of meaning and happiness and financial gain. But that isn't going to be for everyone. And it's really about sort of digging deep and looking at what matters most to you. Yeah, I hope that answers the question, Ari.
Yeah. I mean, once again, so many really important, impactful points. I'm so glad this is being recorded, because I think so many people need to hear that idea that we're looking at, you know, what is this money giving us access to? That's the vision. Really, it's not the money itself. It's whatever it is that you value yourself. And I love that you brought up the idea about, you know, working a 9 to 5 and maybe running a business can be different. Now, I can personally attest, firsthand experience, I run a tech startup in London, for context, and it is nothing, it's not working 9 to 5, it's working 12 to 7. Like, you know, when you're running your own thing, the intensity of your emotional involvement in what you're doing, it means that you actually don't really switch off. There's kind of a blur between you and what you do for work, and it becomes a part of your identity. And that's actually okay, you know, when you're doing impactful work and you're seeing the result and you love it with a passion. But then if that isn't there and you're basically just doing it to make money, then you will actually end up quite unhappy. Being an entrepreneur is it can be very lonely, it can be very isolating. And there are plenty of times that I crave the structure of a, you know, I don't want to say there's no such thing as regular work, but, you know, having kind of a 9 to 5 setup where I go in, I can switch off at 6 or 7. And so there's the grass is always greener, it does come into it as well. And I'm aware we've only got about 5 or 6 minutes left. So I wanted to leave a few minutes for some questions from anybody in the audience before we wrap up, at 3. So I'll just read the chat to see if anyone's got any questions. But if anyone wants to just unmute yourself and speak up and ask any of us, Vicky, Paris, anything that's on your mind, we're here for it. okay, here's a question. How well does an individual realize how much money they need to be happy? So educating early on answer to this question will allow them to make healthier choices down the line. So yeah, that's actually a good question. Like, how do we need to know, how do we know where that point is where, you know, based on my vision of my life, I know that I need, I don't know, £100,000 or maybe £50,000, or, you know, and Craig here says research suggests $75,000 or thereabouts. And then Paris, you mentioned a couple of points about aligning your values. So yeah, maybe it'll be nice to touch on that a little bit and help anyone listening to get a little bit clearer. And I know Craig here has put his hand.
Yeah, so there's one thing I wanted to say, which is that the even broader question is, how much money will it take for your microeconomy to be happy? Because the fact is that the further we get into life, happiness, as we know, is not just my happiness, but the happiness of my children, my spouse, my siblings. So the even better question to ask is not how much money do I need to be happy? How much money do I need to support my microeconomy, which is that reciprocal loop of happiness?
Yeah, I mean, perfect question. I'd love to get Vicky's thought on this and how we could possibly know this.
Sure, I can definitely take maybe the more quantitative side to this, which is, you know, how much money do we think we need? Great question. More people should ask it. And there are actually some really interesting models that financial experts use to try and determine this figure. So there are two elements to your wealth. There's human capital. That's how much you're going to earn throughout your lifetime in the future based on what you do, and you know that figure will also change. And then there's financial capital. How much do you actually have liquid in, you know, in assets at the moment? That gives your kind of complete wealth picture, you know, your potential to earn in the future, and also what you have right now, and how much you can invest to grow that. And using that number and that figure, which should be revised on a very regular basis, you can determine your kind of capital sufficiency ratio, which is how much you need to maintain your standard of living for the rest of your life. Lots of financial advisors will use something called a Monte Carlo simulation. Very, very big word, but they're essentially modeling you know, the probability of how long you're going to live, the risk that you will outlive your assets, based on an you know, assumption growth rate of your salary and human capital, and also an assumed growth rate of your financial capital based on your portfolio. You know, of course, it was always subject to change. Your circumstances are always subject to change. Your standard of, you know, of living, you know, aspirations might change. But the whole idea of portfolio management is to ensure that you can maintain your standard of living, and you are not getting into a scenario where you essentially cannot afford your life. And that's the whole kind of, you know, purpose of portfolio management. So I mean, I've answered really the quantitative side to that. The other aspect of the question you asked, which is how much do I need to be happy, I cannot answer that, so I'll pass over to Paris.
I mean, the first thing I say is what is happiness? Like, what does happiness mean to you? Because happiness might look very different to me than it does to Vicky, than it does to Becky, and so on. So essentially, it would be looking at what happiness means to us and acknowledging that happiness is fleeting. It's an emotion. It's transient. It doesn't sort of stay stagnant. We're not always going to be happy. But what are those things that give us those short bursts of happiness? Is it holidays? Is it just spending time with family, which could cost, you know, little to nothing? Is it exercise and, you know, going to sort of boot camps or wellness retreats? So it's about looking inward and acknowledging what are the times when I feel most happiest, and maybe making a list of the different things that you're engaging in. And then maybe looking at the same thing with family. So, you know, if you've got children, is that a particular child is really interested in sort of gymnastics, and then you've obviously got to ensure that you're able to kind of pay for those lessons, and anything in the future that might come out of having a, I don't know if they want to go into the Olympics or whatever it is, but I think it's really hard to say, but I think it's about just acknowledging, what does happiness mean to you? Does it mean to your family? And how much of that can you kind of get with within the means of kind of not constantly chasing happiness as well. Because it can look like, okay, these are all the things that make me happy. I want to feel happy constantly, so I'm going to constantly invest and put money into these things, when actually that isn't really going to make us happy at all. And actually, in order to kind of feel happy, we also have to feel other emotions as well, to be able to appreciate happiness when it comes along. So again, I'm going to go back to kind of values. I would say looking at what your personal values are, actually looking at what values are for your family unit. Do you have sort of core principles as a family? And actually, you know, speaking to little ones, or your you know, your adult or teen children, and asking, you know, what are the things that make you happy? And, you know, with regards to your finances, how can you invest in those things? So if it's education, thinking about tutors or whatnot, I think it's hard to quantify. One thing I would say is money, in my idea, I know it sounds a bit wishy-washy, but I see money as an energy. It kind of comes and goes. And I think if we can kind of work on our beliefs and our money mindset, and acknowledge that whatever we need, it will kind of come to us one way or another, by seeking out opportunities, by opening ourselves up, by looking in remits that we may have not looked in before, we'll often find that we have what we need. But knowing what we need is the first point. How do you know what you need? And that's really looking inward. I also believe that our finances has a lot to do with what we can manage. So it's really about kind of looking at actually what can I manage in this moment? I don't think we're given more than we can manage in a particular moment. So again, if we're kind of thinking about what's going on in our environment, what's going on in our families and personally, then we can kind of consider, okay, I might need a bit more here, or it's not that I need more, I need to maybe manage my money better, or maybe I need to look at investing. So it's not necessarily about trying to accumulate more, but how can we find more with what we've already got? But I know we're running out of time.
Thank you so much. I know we're at time now, and I just want to say a huge thank you to Vicky and Paris for sharing their invaluable wisdom in this area, and thank you all so much for joining us as well. We've really enjoyed having this discussion with you.